The date is January 24th, 2026. The holiday season is over, the decorations are down, and the bills are sitting on the kitchen table. For millions of Canadians, this is the most stressful time of the year. But for a growing number of households across this country, stress has just turned into absolute panic. Imagine logging into your online banking app this morning to pay a utility bill or buy groceries. You rely on your home equity line of credit, your HELOC, to bridge the gap between your stagnant paycheck and the skyrocketing cost of living. You have done this for years. It is the only way you survive. But today, when you look at your available credit, the number is zero. You haven't spent it. You didn't max it out. The bank simply took it away. This is not a glitch. This is not a system error. This is the beginning of the most aggressive financial rug pull in Canadian history, and it is happening right now, in silence, behind the closed doors of the Big Five banks. While the mainstream media is still talking about interest rate tweaks and soft landings, the ground beneath your feet is being liquidated. We are witnessing the start of the Great Credit Freeze of 26, a systematic recall of debt that threatens to bankrupt the Canadian middle class overnight. The banks know what is coming. They have seen the internal data. They know the true value of your home is no longer what the appraisal said 2 years ago, and because they are terrified of the crash, they are cutting your lifeline to save themselves. If you think you are safe because you pay your mortgage on time, you are wrong. In this video, we are going to expose the brutal reality of the HELOC trap, the secret callable clauses that are being triggered nationwide, and why your house, which you thought was your piggy bank, is about to become your prison. Let's look at the cold, hard evidence because the numbers we are seeing this month are nothing short of catastrophic. According to leaked internal memos and the latest data from the Office of the Superintendent of Financial Institutions, consumer delinquency rates in Canada have just breached a critical threshold not seen since the early 1990s. But here is the data point that should keep you awake at night. It is not just credit cards that are unpaid, it is the revolving portion of secured lending. For the last decade, Canadians were sold a lie. You were told that your home is an ATM. You were encouraged to tap into your equity to buy cars, to go on vacations, to renovate kitchens, and most dangerously, to put down payments on investment properties. This created a massive bubble of phantom wealth. As of January 2026, Canadian household debt is still hovering at world record levels, but the asset side of that balance sheet is collapsing. Real estate values in secondary markets around Toronto and Vancouver have corrected sharply, wiping out the equity that secured these loans. Banks are algorithmic machines. They do not care about your family. They care about loan-to-value ratios. When the algorithm detects that your home value has dropped or that your debt service ratio has climbed too high due to the relentless cost of living crisis, it triggers an automatic reduction in your credit limit. We are seeing reports from viewers in Brampton, in Surrey, in Kitchener, who received letters this week stating that their HELOC limit has been reduced by $50,000, $100,000, or in some cases, completely suspended. This is the appraisal cliff we warned you about last year. The banks are quietly reappraising portfolios, and the results are ugly. They realize they are exposed to billions of dollars in unsecured risk if the market drops another 10%, so they are freezing the liquidity now. This is a preemptive strike against the Canadian consumer. To understand why this is happening, you have to understand the mechanism of the trap you walked into. A home equity line of credit is a demand loan. Most people do not read the fine print of their mortgage documents. They assume that as long as they make the minimum interest-only payment, the bank cannot touch them. That is false. A demand loan means the lender can demand full repayment or reduce the limit at any time, for any reason, without notice. For 15 years, banks never exercised this power because housing prices only went up. It was free money for them and free money for you. But the party is over. The liquidity cycle has turned. The Bank of Canada may have paused rate hikes, or even cut them slightly, but that doesn't matter when the risk premium spikes. The banks are currently provisioning for credit losses at a rate that suggests they expect a severe recession in 2026. They are hoarding cash and reducing exposure to the consumer. When they cut your HELOC, they are essentially taking money out of the economy. Think about the implications of this. If you cannot access your line of credit, you cannot renovate your home. That kills the construction industry. You cannot, we are, once the, let's get, they bought, they were, his car, he has no savings. He has a mortgage payment due in 4 days. Mark is technically solvent on paper, but he is bankrupt in reality. He is house rich, but cash broke, and now the bank has sealed the exit. Mark and Sarah now face a choice that thousands of Canadians are facing this month. Do they sell the house at a loss to free up cash? If they sell now, after real estate fees and penalties, they might walk away with nothing, or worse, they might still owe the bank money. This is the negative equity trap. They are prisoners in their own home. They cannot refinance because they don't qualify under the new stress test rules. They cannot borrow more. They can only bleed out slowly until the foreclosure notice arrives. This is the human cost of a banking system that incentivized reckless borrowing and is now punishing the victims for playing by the rules. And who is to blame for this disaster? We need to look directly at the leadership, or lack thereof, in this country. The Bank of Canada, under Tiff Macklem, and the federal government, under Justin Trudeau, created a moral hazard of epic proportions. They kept interest rates artificially low for too long, encouraging Canadians to take on record levels of debt. They told you that borrowing was cheap and that housing was a safe investment. They allowed the banks to push these HELOC products like candy. It was predatory lending disguised as financial assistance. Now, the regulators are suddenly waking up and demanding that banks increase their capital reserves. This is the regulatory whipsaw. First, they tell the banks to lend. Now, they are terrified of a banking collapse, so they are telling the banks to tighten, and you, the citizen, are caught in the middle. The banks are protecting their shareholders. The government is protecting its credit rating. No one is protecting you. The Office of the Superintendent of Financial Institutions, OSFI, implemented new guidelines recently regarding combined loan plans, forcing banks to be stricter with how much equity you can access. They framed it as consumer protection. It is not protection. It is a controlled demolition of your purchasing power. They knew this would happen. They knew that by forcing these rules in a down market, they would trigger a liquidity crisis. But they did it anyway because they would rather sacrifice the homeowner than risk the stability of the banking oligopoly. The system is rigged to ensure that when the music stops, the average Canadian is the one left without a chair. We are also seeing a massive impact on the investor class. The mom-and-pop landlords who were told to use the BRRRR strategy, buy, rehab, rent, refinance, repeat. This entire strategy relies on the ability to pull equity out of one property to buy the next. With HELOCs being frozen and loan-to-values being recalculated, the BRRRR strategy is dead. Investors are now stuck with cash flow negative properties that they cannot refinance. This is why we are predicting a massive wave of inventory hitting the market in the spring of 2026. These aren't people selling because they want to. These are forced liquidations. When an investor has 5 properties and the bank freezes the credit lines across the entire portfolio, they don't just sell one house. They have to sell everything. This will flood the market with supply at a time when there are no buyers, driving prices down further, which in turn causes the banks to freeze even more credit. It is a death spiral, a self-fulfilling prophecy of doom. The housing market cannot function without credit. Credit is the oxygen, and the banks are pinching the tube. Furthermore, consider the psychological toll this takes on a society. When you strip away the financial security of the middle class, you create instability. We are seeing crime rates rise in major cities. We are seeing a mental health crisis directly linked to financial stress. The government's response? More distraction. More talks about climate initiatives and international relations, while the economic backbone of the country is snapping. They are ignoring the reality that the average Canadian is drowning. The rent-seeking economy that Canada built is collapsing. We don't make things anymore. We just trade houses back and forth. Now that the trading has stopped, we are realizing there is no real economy left underneath. The productivity crisis that everyone ignored is now biting back. Without the artificial stimulus of home equity spending, Canada's GDP is set to contract violently in the first and second quarters of this year. We are looking at a deep, prolonged recession that will make 2008 look like a picnic. The safety nets are gone. Employment insurance cannot cover the mortgage. The government is already running massive deficits and cannot afford another bailout without causing hyperinflation. We are on our own. So, what does the future hold for the next 6 months? Expect the letters from the bank to keep coming. If you haven't received one yet, do not get comfortable. It is likely in the mail. The banks are moving region by region, risk profile by risk profile. They are using AI to predict which borrowers are most likely to default, and they are cutting them off preemptively. It is a ruthless algorithm of survival. We will see a surge in private lending. Desperate homeowners, cut off from the Big Five, will turn to predatory private lenders with interest rates of 15–20% just to keep the house. This will only delay the inevitable and deepen the pain. We will see the shadow inventory of failed pre-construction projects finally being acknowledged as total losses. Developers will go bankrupt, leaving half-finished towers as monuments to our greed. And through it all, the political class will gaslight you. They will tell you that the fundamentals are strong. They will tell you that help is on the way. Do not believe them. In conclusion, the freezing of HELOCs is the final nail in the coffin for the Canadian housing bubble. It marks the transition from a correction to a full-blown depression in the real estate sector. The liquidity that fueled the lifestyle of millions has evaporated. If you are watching this and you still have access to credit, my advice is stark. Do not rely on it. Treat it as if it does not exist. Cash is the only thing that matters now. If you have debt that is callable, you are vulnerable. Deleverage as fast as you can. Sell assets if you have to, before everyone else rushes for the exit. The window of opportunity to escape with your equity intact is closing, if it hasn't closed already. The banks have signaled their move. They are retreating. They are boarding up the windows for the storm. You need to do the same. Do not let your pride keep you in a house that is dragging you underwater. The market doesn't care about your memories. The bank doesn't care about your struggles. This is a financial war, and the first casualty is your access to your own money. The system is protecting itself at your expense. Wake up to the reality of 2026. The easy money era is dead and buried. We are now in the era of consequences, and the bill has come due. Make sure you are subscribed to this channel, because the mainstream news will not tell you the truth until it is too late. We will keep exposing the rot in the system. We will keep tracking the collapse. Prepare yourselves. The worst is yet to come.